some reports suggest that family offices have struggled in terms of expectations. 9 out of 10 have failed to meet expectations. Where your members are concerned, give us a sense of how they've done so far.
Well, we are seeing a very interesting trend within our network. So multi-generational families that have traditionally been, as you said, in businesses like hotels, airlines, retail, anything that requires consumer footfall, they are hurting significantly. But then we notice that families that have used technology as the cornerstone of their businesses are a lot more resilient. So if you're a family that's into building smart factories, if you're into e-commerce or say digital delivery, you could be seeing your revenues grow 10 times this year.
So when you talk about a change in strategy, what are we seeing? Are they more risk averse? Are they adding to risk given the rally that we've seen in the equity markets?
So I think that family offices are, of course, responding to it in a couple of ways. I think firstly they have to defend their own businesses, right? So in terms of, that defensive play, we are seeing families add technology. We are seeing families, think about new phase of diversification. Many of them are powered by their next generation. That is, they're really looking to incubate businesses like digital infrastructure, data centers, digital economies, and maybe future of work technologies.
Aradhna, hedge funds have been quite reluctant to embrace this rally. They haven't really bought into this whole story that the retail side is saying that, this global recovery trade is on trend right now. Do you think that skepticism is justified now?
I absolutely agree with that. I think that this is all going to end a little bit in tears. There has been so much structural damage that has been done to business economies around the world. In the U.S. alone, we have 40 million people out of work. How can something like that translate into a very steep rally, within weeks? We are not even out of the woods yet. As you guys said just, a couple of minutes back, we are seeing second waves of COVID all around the world. I think families are very resilient. They've seen these storms over multi-generations, and they certainly understand that this is not going to go away so easily. So, I certainly share the family officer's view that this healing is going to take quite some time, and therefore nobody should be jumping into any markets very, very quickly.
And tell us a bit more about these bold predictions you're making for the next 5 years for family offices. You mentioned about the shift into the next generation of tech. Also, Southeast Asia, India will become the biggest gainers in investment allocations, and China is actually going to take a bit of a pullback. What's driving that narrative?
So, historically, even with our network, I think when family offices want to look at Asia, the first step would pretty much always be China. That's where all the action was. It was the demand and supply engine of the world. There was nothing that was not great about it. But I think COVID-19 has changed all of that, right? We are certainly going to see a lot of demand shift to Southeast Asia. We are certainly going to see all the supply chains shift to Southeast Asia. So we are seeing families, looking to invest, say, in warehouses in Vietnam, in e-commerce in Indonesia, or, tech in India. We've seen 3 to 4 great deals for Jio, for example, in the past month. And, even frontier markets like Bangladesh and Burma are on family offices' mind.
Why do you remain bullish on Hong Kong real estate, given some of the trends we're seeing right now? With the U.S.-China trade tensions and rising concerns in Hong Kong, the wealthy in Hong Kong are possibly considering investments elsewhere. So why remain bullish on Hong Kong real estate?
Well, that's a good question. We, like many of the families here, are a Hong Kong story. So we always joke amongst ourselves and say, where do we have to go but Hong Kong? But, in all seriousness, I feel like, there is no place like Hong Kong, which has such, deep and diverse work pool, great values, great entrepreneurial spirit. And I'm not going to say that there'll be no departures. There certainly will be some departures. But I think the whole Greater Bay integration and organic growth that we're going to see in the next 5 to 10 years will make up for more than that. And I think it's that confidence that's being parlayed into the resilience in the Hong Kong property sector. I've lived through SARS, and I saw the markets fall 50% at that time. And frankly, we made quite a few good investments at that time as well. But this time down. We're coming off 1 year of protests and COVID-19. And if you look at real estate prices in Hong Kong, they're not down more than 6 to 7 to 8%. In fact, I was looking at Bloomberg numbers yesterday, and I think you guys are projecting 6 to 7% drop in residential prices and maybe 8 to 9% drop in commercial prices. That's amazing.
Before we let you go, Aradhna, just a question of the day. How do you think Hong Kong will stir assets this year? How will this play out?
I'm sorry, I didn't quite get that.
How do you see the situation in Hong Kong impacting asset classes this year?
That's a good question. I think that, there is definitely going to be a short-term impact. And I think pretty much everyone is thinking about how to deal with that. Hong Kong IPO market actually is going to be very, very vibrant. As you know, it's been a huge beneficiary of the trade tensions between U.S. and China. So we are going to be seeing, a number of, I think there was a JD IPO last week as well. So we're going to see amazing IPOs in Hong Kong. I think as Hong Kong becomes the exit strategy for pretty much all Greater China sort of stories. And of course, that helps the stock market. Apart from that, I can really only comment on real estate because that's what we look at. You are going to find amazing pockets, of interesting opportunities. So to give you an example, about 10 years back, we went into revitalization of industrial office spaces and converting them into affordable offices for small businesses. That's going to continue post-COVID-19 in a big, big way. So you just have to find those pockets of opportunities.